Welcome back, everyone. This is a brief update on news from the oil market. Crude oil prices stabilized higher in the latest days after the outcome of the OPEC meeting pointed that the major organization will be reducing output in 2020. Also, from the US, the API weekly reading indicated a surplus figure of plus 1.4 million barrels, while the EIA also released a surplus of plus 0.8 million barrels, both increasing after their previous week drawdowns. These surpluses had a minor negative impact on oil prices, yet the commodity remained at higher levels since our previous report. We start first with the previous week's OPEC Plus meeting that took place in Vienna. As a recap, that may prove useful for traders trying to look at the big picture. The petroleum exporting countries and other major producers, including Russia, agreed to deepen output cuts by 500,000 barrels per day in early 2020. Oil prices moved higher upon release of the news on Friday. Through various sources, we have come to understand that there are two possible reasons behind this move by the OPEC Plus team. First, and according to estimations, there was an oversupply of oil expected in 2020, mostly due to the increasing production in the US. OPEC Plus, and especially the Saudis, could be aiming to counterbalance the effect of this glut in the oil market. Second, by extending and increasing production cuts, OPEC may be trying to bring oil prices higher in order to be able to sustain and increase budgets and revenues correspondingly. Furthermore, according to Merrill Lynch, if some OPEC Plus members increase compliance of cutting production, like in the case of Iraq, and at the same time the US and China land a Phase 1 deal, that could send oil prices much higher. Another report that was released on Wednesday implied that the OPEC group saw a potential minor deficit in the oil market in 2020. The deficit was based on supply restriction, particularly by Saudi Arabia, that may occur before the most recently decided upon production cuts take place. This assumption was based on a tighter market than they previously expected. The news also gave a boost to WTI prices. On a separate note, the International Energy Agency stepped in today to give its own view on the oil market supply levels in 2020 and provided a very contrasting opinion to the OPEC Plus team. The IEA supported the notion that regardless of the extra production curbs by the OPEC Plus group, and despite a decrease of non-OPEC supply growth, global oil inventories could build by 700,000 barrels in Q1 2020. On a different matter, Saudi Aramco made its much-anticipated initial public offering on Thursday, generating the very impressive and highest ever total value of $1.7 trillion. Its share price was up 10% for the second consecutive day on Tuesday, providing further chances to reach the $2 trillion market value. The figures show that the Saudi oil giant is of extraordinary interest to investors. As a conclusion, the US-Sino trade frictions and the imminent US tariffs could be the main reason oil prices have not increased substantially since the OPEC announcements. In our opinion, updates on the specific matter could possibly create further volatility for the commodity, and traders are advised to be cautious when engaging the market. For more information and trading ideas, you can visit our webpage, follow us on Twitter, like us on Facebook, or subscribe to our YouTube channel. This is Angelos Zitis from IronFX wishing you solid trading.